Welcome back to the channel, guys. Keith at Crypto Bullseye, and I'm really pleased to say that we've got a special guest. He's going to be the first of many guests and hopefully a regular on the channel, and it's going to be Marcel from MaxData app.
Thank you for having me. Thank you for the invitation, Keith, and I'm really glad I can speak with you.
So firstly, what I thought we'd do is we'd have a look at the charts. I'm going to show you exactly what I think from an overview of the Bitcoin chart, Marcel. Let me just share my screen. So this is the Bitcoin chart, and this is the macro overview of the Bitcoin chart. And what I've done here, Marcel, is I've measured, we could just go in there, I've measured the bottom of the previous cycle and the previous bear market to the top of the bull market. And what I've done is, this is the weekly chart, and I've measured 152 bars from the bottom to the top. Now this was the 2017 top. And what I've also added in is the Bitcoin halving date. So from the Bitcoin halving date, there's roughly 78 weeks until the top. Now we go to the next cycle and we see there's the bottom. You can see that's the date, there's the bottom. 152 weeks until the top of the 2021 cycle here. And that's 79 bars. This is the Bitcoin halving, 79 bars until the top of the cycle. So we've got 78 bars here, we've got 79 bars here. We've got 152 bars from the bottom to the top, and then 152 bars from the bottom to the top. So why I think this is relevant, because it gives us an estimation as to where we are in the business cycle, where we are in the 4-year cycle. So what I've done is I've measured the bottom of the bear market cycle when Bitcoin hit its low back on the 14th of November 2022. It's been in the bull run since then, and I've measured 152 weeks from its bear market low, which gives us an indication of 13th of October 2025. So if it coincides with previous cycles, that's going to be the end of the bull run. Is it going to play out like that? Probably not. So in the meantime, it gives us an estimation. It gives us a bit of wiggle room. I've got the Bitcoin halving built in there, and I've got 78 bars until where I'm expecting the end of the cycle. 79 bars here, 78 bars here. So it gives us an estimation. It gives us a rough end estimation where we expect the business cycle to play out, because 2025 is the year of the presidential elections. 2025 is a year of stimulus. So what I want to add in next is we've got a lot of fundamental things going on. We've got the summit on Friday. Is that going to be bullish news? Is this going to push that back above the 20p moving average, above the 236 retracement? And are we going to get a further push up going into next week? Because it looks like when we look at the Dixie, the DXY, when you look at it on the daily, that is losing support. It's taken out its higher low. Losing support. When it takes out its higher low, that indicates if we close below this level, that is the start of a bear market, the start of a downturn for the DXY. So that is my thoughts, Marcel. What I'm waiting for my strategy to kick in is a break and close above total 3. Once I get a break and a close above total 3, that indicates scaling out for me, that indicates distribution for me. So that's my thoughts, Marcel. I'll stop sharing my screen and let me know what you think.
I wanted to talk about like the recent events that actually happened. We've all seen that major crypto pump like 2 days ago, I believe. Yeah, 2-3 days ago. That was caused by Donald Trump, by like his very positive post on Truth Social that he's like including certain coins in the crypto reserve. And right before like Donald Trump posting on Truth Social, we've seen like a major drop in funding rates. And actually, funding rates dropped below zero significantly. And the last time we've seen negative funding rates was 3rd of February. And on 3rd of February, we had like this massive like drops caused by also our favorite crypto influencer Donald Trump, who let us know about his plans with tariffs of goods from Canada and Mexico. And when we like go even more into the past, we can see that negative funding rates were also seen in September 2024. What can we learn from negative funding rates? Actually, we can see a pattern here that when funding rates get negative, they usually indicate local Bitcoin bottoms. So right here, we've got August 5th. There was also a significant drop, like 28%, also massive dump. And right after that, we've seen 27% increase in 19 days. 1 month later, in September, we've also seen negative funding rates, and right after that, boom, we've got 20% increase. Fast forward to where we are now. Funding rates also went negative, and we've also seen a huge increase in Bitcoin as well. So what I'm thinking is that watching the funding rates metric closely can be a good indicator right now. Also, you are talking about dollar index. So when we look at the dollar index chart here on MaxData, we can also see it started dropping like on March 3rd, so on Monday. And we've got like 0.8% decrease in dollar index. And that's what triggered, that's what triggered an alert on MaxData, which informs us about possible Bitcoin growth after DXY declines. As we can see, the first alert was triggered like right here. It was not actually a perfect spot, but then at like 3 a.m. of my time on March 4th, we've also seen trigger of this pro alert. And right after that, we've had a little drop, like 2% drop, but after that, we're up basically 10% in just one day. I wanted to talk about Coinbase activity. So this metric right here shows us when there's an advantage of Coinbase buyers versus Binance buyers. And what we learned from the past times when this metric was high or low is that Binance buyers usually buy Bitcoin after the increases or when the emotions are high. So they are buying FOMO. And Coinbase buyers are like more calm, more collected, and they usually buy dips better. So right here, when Bitcoin started dropping, the Coinbase buyers started accumulating Bitcoin.
Can I ask you a question on that?
Yeah.
So do you think that Coinbase is more institutional? Do you think that Coinbase is the calmer heads? Do you think Coinbase are the businesses? And do you think that Binance is the retail? So does this metric indicate that the Coinbase holders and the Coinbase volume is more stable volume, more people that's going to hold long-term institutionally and keep something on the books rather than the Binance, which shows indication of retail FOMO?
We often use these terms like interchangeably. So like the Coinbase buyers, we often consider them as institutional investors. So right here, when we see like the advantage of Coinbase buyers, we assume that this is increase in institutional investors. And right here, this alert actually, right here. So these dotted lines right here indicate the moments when there was high buying pressure and increased Coinbase activity. And these moments, as we can see, were generally a good moment to accumulate Bitcoin. So maybe not exactly this one right here, because Okay, there was a slight increase. I will actually show this with this rectangle. There was a slight increase, but then a further dump. Then the alert was triggered again. There was a slight increase and a further dump. And right at $80,000, the alert was also triggered actually 3 times. And this also indicated like a local bottom. And right after that, we've had a little pump to 84,000. And right after that, right before, like maybe one day before Trump bullish news, we've also seen increase in Coinbase activity. And also, as you can see, this is actually a BSP metric, BSP5 metric, which indicates whether there's an advantage of buyers or sellers on the market. So are more sell orders being placed or more buy orders? And when this metric is on the low side, like minus 0.2, minus 0.19, it indicates there's a huge advantage of buyers. So combined with advantage of Coinbase buyers that usually buy the dips, this can be a good signal to buy Bitcoin or long Bitcoin. And actually, I wanted to show you a backtest result I made. So this is the exact backtest of this alert right here. And this shows us how the price of Bitcoin behaved when this alert was triggered. So I checked all the way back to 29th of January 2024. So over a year time, and this alert was triggered 44 times so far. And on average, after the alert is triggered, 48 hours after the alert is triggered, the price of Bitcoin goes up by like 2.5%. So statistically speaking, we can assume that if we buy Bitcoin in this moment, we can expect on average 2.5% growth in 48 hours.
So that's a 2-hour time frame back test. When you're talking about that kind of percentage on a smaller time frame, that's pretty decent.
Yeah, I think it's generally a good idea to watch what Coinbase investors are doing. So yeah, we've got this metric on MaxData. You can also set alerts on this metric. As I shown, you can also pair it with the BSP metric, which is the metric that considers whether there's an advantage of buyers and sellers. But you can also pair this metric with other metrics. As I was showing before, also the funding rates metric is very useful because in this cycle, this metric was not going negative very often. And when it went negative, it usually suggested that the price of Bitcoin might go up in the future.
So the stars are aligned now. I think we're waiting for the fundamental catalyst, aren't we? Whatever that may be.
Yeah.
What I thought we'd do, put you on the spot here, actually, Marcel, or you could put me on the spot, whatever. So what I thought we could do is we'll chuck out a random altcoin and a random time frame. What I'll do is we'll look on the chart. Actually, you give me one. You give me a random altcoin, a random time frame. We'll look on the chart together, and then you can look on MaxData, and then we'll see where we end up and whether things complement each other or whether it's an absolute disaster. So let's do it.
Let's do it. Let's do it.
Go on, hit me with one.
I have to think about it. Let's go
Not too high risk.
Well, let's go with Dogecoin maybe. It's quite popular. Let's see what we've got with Dogecoin. As majority of the altcoins, it had quite a rough time. Recently. Right now it's at $0.2 dollars, which is pretty low. And what I can see right off the bat is that Dogecoin has quite high buying pressure, which is now like minus 0.17. it's not that high for an altcoin, but it's not that low. So when the metric is low, the buying pressure is high. So the buying pressure is not that high right now, but when it gets to like these levels right here, which was on February 3rd, like right there, which is like minus 0.3837, or let's just do like minus 0.3. I think this might be a potential opportunity to maybe long Dogecoin or just like buy Dogecoin for like spot. Right here I can also see the buy orders. Where are the buy orders being placed? And there's like a tiny buy wall at 19 cent level. When it comes to like the place where we at with the price, it's quite even. So it's like 20 cents. It's pretty balanced, I believe. Also a tiny buy wall a little bit below that. So actually, I see this like Dogecoin went right here and right here, and on these levels it sort of bounced back. So I think that this is going to be maybe a level that we can watch. I can also add like an alert for this level. So 18.5 cents. I will do less than and value. And I will trigger it only once, so I will get notified when like the price of Dogecoin drops below these levels. And also I will set an alert for like minus 0.331. Let's do minus 0.31. Buy sell pressure 10, less than, and actually 1 minute interval, because I want this to be like as good as possible. So I can share this alert to you guys, to the viewers of this channel. I believe we also can do some alerts with Keith. So Keith can also create some alerts for you to subscribe to for free, actually. And so you can also get notified on your Telegram, on your desktop, on your phone, on your SMS, and get notified when like this metric drops to unusual levels. So yeah, that's like basically my play out for Dogecoin. I believe this is going to be a level to watch, and yeah, I'm watching also the BSP metric, and let's see how that goes.
So we've got the hourly chart here, very similar to yours. First thing that I would look at is, of course, whether we're in an overbought or an oversold position in the short term. And you can see, have we got any kind of divergence? You can see we haven't got a divergence on the RSI. That's the first thing that I look for. So where you mentioned that there's a buy wall is quite interesting, because it looks like a strong resistance area from my perspective at this level. And you're saying just below this level there was a strong buy wall, which wouldn't give me any indication from my analysis. But if I'd incorporated your analysis in that analysis, it would actually make me think twice, because I would be looking at this as a strong resistance level. And then once we overcome, what's this level here? 21 cents. That looks strong to me. Now, completely agree with this area here down here. I think that the indicators are going to come oversold when we get to this point. Where would we get a rejection in the short term? If we stick a Fibonacci from this little swing here, this is very short term because this is hourly time frame. You've got a big rejection point here, 21 cents. We obviously got this rejection point here. However, Marcel's told me that there's a buy wall here, so I'm intrigued to see how this plays out, actually. It is good when you put hand-in-hand analysis with two different types of metrics. I like to use sometimes fundamentals as well as technicals, or mainly technicals, less so fundamentals, because I haven't got time to research all these projects. There's tens of millions of them out there now at the moment, so I can only go by what the chart tells me. But it's interesting to actually bring on-chain data as well as technical analysis, my technical analysis, to give me additional complements to see whether that would be a good area. Because if I'm honest with you, there's a potential that I'd sell at this point here. I'd sell at this point here. I have a stop loss here, tight stops, and then if I got stopped out, I got stopped out. But now I'm thinking that's something that I wouldn't do. I mean, it's not. I'm not interested in trading at the moment, to be honest with you. I think there's too many fundamentals at play, and we need some kind of directional bias. That's what we're waiting for. And we were talking previously on our last call about what that fundamental catalyst could be. You know, in the news today, there was talks of peace, dare I say. And I've done a video earlier on, Marcel, about what I think about tariffs and how tariffs have hit the market, and what Trump's trying to do as far as an economical perspective is. He's trying to bring business back to the US. He's pretty much forcing business back to the US by implementing these tariffs. And ultimately, once the businesses have committed to the US, what needs to happen? That dollar needs to get so weak, otherwise they're not going to be able to export anything, because it's not going to be cost effective for our weak currency against a strong dollar to be able to import goods or export goods from the United States into the United Kingdom, for instance, from the United States into Poland, for your perspective, and it'd be cheaper to get it elsewhere. So it's all well and good having the tariffs and getting the companies in there, but that dollar needs to be weak for people to be able to afford things from America and reduce that deficit that they're talking about. So all eyes on the dollar. I think that's the key metric at the moment, and I think that we are going to get a reduction in interest rates, and I think that we are going to get some kind of inflation. They'll inflate the dollar, and once the dollar's inflated, then the rest of the world will inflate their fiat currencies, because they're going to be able to afford to refinance that. So it is a business cycle. I think the business cycle's playing out as normal, but it's a little bit late. It's a few months late than what I'd expected. And I talked about in a different video as well, actually, why I think that potentially selling may walk away is something that is just so well known at the moment. And we know that it's institutional holidays. They all go on holiday. They go 2-3 months, go and spend all their money that they've just made from the retail, enjoy themselves, go away. But this time, everybody is saying, sell in May, I'm going to sell in May, I'm going to walk away, I'm going to sell in May, I'm going to walk away. We're in March now. We haven't had alt season. That ain't going to give us much time, is it?
Yeah.
So I just think that sell in May could potentially be a red herring this year. I don't know that. Nobody knows that, but it's one to watch.
Basically, when I feel like when everyone's talking that something is going to happen, like in January, everyone was saying like, "Oh my God, Trump is going to make us millions. Trump is going to like take Bitcoin to 200,000." And what we've got like 20-30% correction, I believe, and massive panic, like fear and greed index dropping to record lows. So yeah, sometimes the market is like doing quite the opposite of what most people think, and that's what we also, I think, need to keep in mind, that sometimes to like get results we have to like maybe think the other way, like think differently, and maybe look at the things that some people don't look at.
No, completely agree with that. Completely agree with that. And it was, to be honest with you, it's really good having you on. And I'll put you on the spot. Is this going to be a regular thing, Marcel?
I mean, I'm really eager to do that. So if that's something that the viewers would be interested in, and they want to see more of like on-chain analysis, because like as you said, you are more like of a technical investor. So when I can like bring value with on-chain metrics and give like a different point of view, I think that this will be beneficial for both of us, for viewers, and better for the world in general.
Yeah, definitely, definitely more exciting. So no, you're going to be the first of many guests, but it's going to be a regular thing, because MaxData is something that we've been working on and we've been talking about in the background. And I'm going to only bring things that add value to this channel. It's not going to be, and I've got nothing against Bluff, I've got nothing against Bybit, I've got nothing against them exchanges. There's a couple of things. Is I'm a UK citizen. I can't do anything that's against the Financial Promotions Act that they've implemented in the UK. Can't do leverage, can't work with exchanges. But what I want to do is actually bring things that add value. So it's going to be like tax consultancy services that are going to help people retain what it is that they've got. It's going to be more risk management techniques. It's going to be people that have had financial freedom. It's going to be experts like yourself that have got platforms like MaxData that's going to integrate whatever it is that I do and connect it with what you do. And hopefully if these things bring together, it'll give us additional confluence. weight behind our thesis. So that's probably about it for me. But thank you so much for coming on the channel. I'm sure we're going to see more of you. And yeah, goodbye from me. Thank you very much again.
Thank you for inviting me and giving me like the opportunity to talk about MaxData and hop on the channel, and I'm really grateful for that. And yeah, I believe that we can bring more value together in the future.
Definitely. That was just a brief introduction. We're going to go more in depth as the videos go on, I'm hoping. So you're going to teach me some stuff.
Yeah, definitely.
All right, that's great. Thank you very much for your time, Marcel. You take care of yourself.